Hi guys. Today we will analyze Global Payments stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Support levels are around $118 and $108. The next support level is around $96. Resistance levels are around $127 and $137. The next resistance level is around $151. In the last month the stock has been trading between $122.50 and $153 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 2.4 million. This is a good sign as it is always nice to have a liquid stock. The stock is currently trading near the lower end of its 52-week range, which is not a good sign. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 20% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 216% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Global Payments Company: bad, average, and good. First scenario. Global Payments will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 8%. Future free cash flow to net income rate would be low, 100%. In this case, the fair value of the stock today would be $64. Second scenario. Global Payments will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 6%. Future profit margin would be average, 10%. Future free cash flow to net income rate would be average, 120%. In this case, the fair value of the stock today would be $99. Third scenario. Global Payments will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 8%. Future profit margin would be high, 12%. Future free cash flow to net income rate would be high, 140%. In this case, the fair value of the stock today would be $145. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.29. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Global Payments, analysts forecast growth rate around 9% per year in next 5 years, and future P/E around 14. Again, I will use 3 different scenarios for Global Payments Company: bad, average, and good. First scenario. Global Payments will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 20. In this case, the fair value of the stock today would be $34. Second scenario. Global Payments will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 6%. Future P/E would be average, 25. In this case, the fair value of the stock today would be $50. Third scenario. Global Payments will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 8%. Future PE would be high, 30. In this case, the fair value of the stock today would be $71. As you can see, today the stock is overvalued, $122, even if we expect the company's high performance in future. Prices have been falling strongly lately. It's better to wait for signs of reversal. The stock may drop lower before it rises. And the stock is currently a little bit overvalued in my opinion. Full disclosure, I'm pretty heavily invested in PayPal, Visa and MasterCard stocks, so I don't really need another fintech stock at the moment. However, I may consider buying the stock when the stock drops to $100, and when it shows signs of reversal. Company's strengths. Global Payments is a financial services company that offers payments and software solutions. The company has partnered with more than 1,300 financial institutions in 100 countries and supports more than 140 different types of payments. It provides its services through a variety of distribution channels, which enable customers to accept card, electronic, check, and digital-based payments. Pricing is based on a percentage of the transaction value. The company has created a forward-looking ecosystem through partnerships and acquisitions with promising upsides. The company is strongly leveraging on its B2B initiatives by extending its contracts with mega institutions like Citigroup, Amazon, Google, and PayPal. Global Payments products have strong brand recognition in the consumer financial services industry. The company is expected to take advantage of secular changes in the payments landscape, which include the increasing use of electronic payments over cash and checks. The company has also proactively detailed its role in installment payments, where Global Payments processes over 128 million pay-later transactions per month, spread across both bank, non-bank partnerships, and enabled by its tech-enabled business. The company has a profit margin of 11%. This is better than the industry average of 1.5%. The company is financially healthy and should not expect problems in meeting its short-term obligations. The revenue is expected to grow by 9% on average over the next 5 years. In the coming 5 years, the earnings per share will grow by 15% yearly. Risks. Global Payments is broadly exposed to global economic conditions and their impact on consumer card spending, and faces risks related to the severity and duration of the coronavirus pandemic. The company also faces integration risk related to its recent merger of Total Systems Services. Attrition of referral partners and independent software vendors could also adversely hurt the stock. Competitiveness in the consumer financial services industry is putting downward pressure on the company's profitability. The company has a return on equity of 3.8%. This is below the industry average of 14.8%. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.